Welcome to the Australian Property Investment Podcast with your host, Aaron Christie David. Each episode, we ask an expert to share their key insights for aspiring investors to make confident property choices.
G'day everyone, welcome back to another episode of the Australian Property Investment Podcast. My name is Aaron Christie David. I'm your host and I also run a mortgage broking business called Atelier Wealth. I specialise in helping property investors start out and also scale up their property portfolios. And as part of that journey, when people are looking to scale up, there are some blind spots that come up and we want to educate and fill in some of those gaps for a lot of our investors that are on the journey and hungry to kind of feed their brand with some more information. So each and every episode, we bring in someone that I call best in breed. And what that means is someone that's knowledgeable, someone that lives and breathes their subject matter as an expert and does this on a daily basis. And today we are super blessed to be joined by Mitch Van Reyk in the studio. G'day, Mitch.
G'day, Aaron. How you doing?
Mate, excellent. Thanks. How you doing?
Yeah, mate, I'm very well, thank you. Thanks for having me on.
Mate, thanks for being here. I mean, full disclosure, mate, we've known each other for quite some time. We go way back, more years than we care to remember.
We're a lot younger.
Yeah. And our families have known each other. And that's why it's kind of great that not only our families kind of collided, but I guess on a professional level, our worlds have kind of mixed as well a little bit. And great to see that you've gone out on your own, started your own insurance broking business, and that's really what I want to kind of have a chat to you about today, which is all things insurances related to people when people buy property, when they buy investments, and what happens from a personal perspective, because that's one of the big questions that comes up as well. So what we want to try and do is answer a lot of frequently asked questions here so people can hear it directly from an expert that they may not have access to that at their fingertips as well. But before we do kick off, it's what I call the 3 Ps. The 3 Ps are personal, property, and professional side. So whatever you care, feel free to share. And in terms of, I guess, I mean, you mentioned before about your 2 children, for example. I'm sure that keeps you fairly busy now as a father to teenage kids.
You know, as we were speaking to earlier, 2 beautiful kids.
Yeah,
they're in their late teens now. One's still at school, and the other one's just gone through year 1 of uni.
Yep.
But just had a realisation that she wants to get into full-time work and just started at Ray White as a budding future real estate agent.
Mate.
So wish her all the best there.
Mate, it's a great career to get in early. Get in early, get some good, as I was saying before, get a good platform, start to build your network. And it's one of those industries, mate, if you want to work hard, it's, I guess, uncapped earnings. It's where you want to take your future, really, isn't it?
Well, it's great. As an 18-year-old, she actually has something that she thinks she wants to get into. I think a lot of us just sort of fell into our roles a long time ago. So I'm glad that she's got some focus.
What, you mean no one ever grew up wanting to be an insurance broker?
No, mate. I can tell you, you'll find even the up-and-coming 18-year-olds will fall into it because either their parents or somebody said, why don't you try this?
Yeah, great.
But it's a great industry. And I guess, you know, from a professional point of view, you know, I've had the fortune of being in the industry for over 30 years, 50% as a broker, been very fortunate to look after the large corporates, the commercial and SMEs, and the other 50% as an underwriter. And I guess that other 50% as an underwriter gives me a good understanding of what clients' expectations are in managing their insurance programs.
Yeah.
Because, you know, particularly in this marketplace, things aren't easy with insurance. So having that little bit of edge and understanding how the insurer works and thinks, I think gives me a little bit of a competitive advantage.
Yeah, not a little. It's a massive competitive advantage. So when you talk about underwriting, for those that aren't unfamiliar with the word and what that entails, bit more detail on that.
An underwriter is basically works for the insurance company, the large insurance company, who basically insures the client's risk.
Yeah.
They price it. They talk to their actuaries. They look at risk. They look at exposure. They price the program and then undertake on the basis that you pay the premium, and when you have a claim, they come up with a promise of paying the claims subject to the terms and conditions of the policy. So, and that's when a broker sort of comes in at the end as well. So we'll touch on that later.
We absolutely will. And I guess before we do proceed, normal disclaimers come in here that this conversation is very general in nature and not intended to give advice. And if you do need advice, we definitely recommend reaching out to a trusted and accredited insurance broker and mortgage broker respectively as well. As we kick on, so let's start kind of at the beginning, which is for maybe those that are the uninitiated or those that don't understand, because you mentioned the top end of town. So people understand insurance at a very, very corporate level or business level. But as an insurance broker, take me through, I guess, your role kind of end to end?
An insurance broker, I mean, what I do for my clients is basically, first of all, I find out their financial needs and objectives. That's critical, which is then falls into providing personal advice as opposed to general advice. And a lot of clients don't know the difference between personal and general advice, and sometimes they get caught. So a role as a broker is to offer personal advice based on the client's objectives and financial positions. And then we go out into the insurance marketplace and we find the best insurance program for their needs and ask the necessary questions, understand their risk and their business activities, and then we price it. We then work with the underwriters to obtain the best terms and conditions. And the way I look at it is, what are the benefits we provide, and what are I guess the problems we solve. The benefits we provide is understanding what their needs are, and then finding a bespoke program that is competitively priced, that covers their risks and exposures, and is going to respond when you need it to respond. And finally, I guess the other key benefit is dealing with reputable insurers that, are going to be there when you need the claim to be paid. And I guess the biggest role of an insurance broker is the claims advocacy. So when a client does have a claim, they're going to want to be put in the same position before that loss, and so that their claim is prudently managed and they get their rewards and the policy responds accordingly. And I can't speak highly enough of the roles of insurance brokers and how they manage clients' claims, because that ultimately is why you pay your premium.
Exactly it. That's why you're going to them, isn't it?
That's why you go to a broker.
Have my back when something goes wrong. And
Correct.
Yeah. Perfect. So I guess we want to kind of zoom into the context of an investor and property side as well. So one of the biggest fears for, say, a new investor is, what happens if, right? So the scenario is, what happens if the tenant damages my property? What happens? And you certainly wouldn't be the first, nor would be the last person that ever happens to. You hear some horror stories, but what happens if there's damage to my property? What happens if there's issues with the building? What happens? And it's all these what ifs, for example. And it's like, well, hang on. I'm pretty sure the insurance is there for all those what if scenarios. And I guess that's what we want to kind of go through today, which is let's have a chat about some of those what if scenarios. And where does an insurance
I guess from an insurance perspective, if we're looking at two scenarios here, a commercial investor or a property or a residential investor, I'll quickly go through a commercial investor, a little bit different, but the similarities are the same. You're going to want your building covered, you want your loss of rent covered, you want your public liability, and I won't go into great details of the trials and tribulations of that, and also you got your tenant default. Which is basically if your tenant packs up and leaves. So from a commercial perspective, I won't spend too much time on that. But when it comes to commercial investment, construction of your building and where the building is located is critical, because you'll be incredibly surprised the pricing differential. You buy a commercial property in far north Queensland, or even a residential apartment or a house in far north Queensland, you're going to find the premiums there are significantly higher than Sydney, and that's driven by the catastrophe cyclone exposures. Residential investors should also have the same cover. First of all, you want to cover the building. You want to cover the loss of rent, and when we talk about loss of rent, you agree that your tenant's going to pay you X a month, X a week. You want to cover that in case that building is burnt to the ground by bushfire or a major storm, prevents that tenant from being in that premises. The policy will respond in picking up that loss of rent. A lot of people get loss of rent confused with tenant default. Now, tenant default in the last couple of years is a very critical extension to residential landlords' policies. Right. Because what it basically covers, your tenant default, is that if your tenant is in arrears with rent, breaches their contract and leaves, you then most likely have a deficit of rent. This is when tenant default cover will pick up any deficit of rent up to the policy limits and put you in the position before the tenant packed up and left.
Right.
So that's really, really important, particularly in tough times like we've experienced over the last couple of years.
Yeah.
And it gives the landlord peace of mind that their building's adequately covered. They get loss of rent if it burns to the ground. The public liability component, if someone slips and trips and puts a claim against you, if they've hurt their back, very critical. That's part of a residential landlord's policy anyway. And tenant default, which not all policies have. So as a role as an insurance broker, we always give the option of our clients to take up tenant default. And you'd be surprised, it's not that expensive, but it gives you great peace of mind if your tenant packs up and leaves.
Yeah, I guess it's less about the cost. I mean, we're talking about insuring an asset, like an income-producing asset. So why would we want to cut corners for the sake of a few bucks? The peace of mind, for example, your property could be interstate. It's out of sight. It's out of the location that you're in. So why don't you just kind of have the right protection in place, which then helps you sleep better at night, doesn't it?
Absolutely, Aaron.
Yeah.
But you'll be amazed, and I'll touch on that later. People do look to try and save from insurance.
Oh, absolutely,
because it is a forced spend.
Yes,
no one likes paying for insurance, but I tell you, the clients that are the happiest is when they find that their policy and their claim is going to be covered, and their full entitlements are going to be paid.
That's it.
And they go, "Wow, now I know why I pay what I pay."
Yeah, I guess look across the board, mate. Insurance. Not that it's got a bad rap, but it just has that connotation, which is, if I don't have to kind of spend it, I won't. I mean, what are we underinsured on? Pretty much life insurance, for example, pretty much all facets. Cars, we're underinsured. Income protection, the amount of people I see on high incomes that don't have, personal protection, it's not up to date, for example, like, I will be okay. I'm like, well, actually, first of all, we're our own greatest asset, our ability to earn and our health. And then the next part is income producing assets and then the properties that we own as well, right? So to us, it's a no-brainer, but I guess to some people, they have to go on that journey to then, I guess, to justify it and then say, yep, I need to make peace with having this cost come out as well.
Underinsurance is a big thing, unfortunately, for predominantly mums and dads with their houses.
Yeah.
And it's an education thing. And you get a broker, they're going to educate, but not everyone is going to be in that position. And, the recent bushfires we had it really brought up a serious underinsurance issue in Australian home and contents. And we see now with changes to building regulations where now they have to, comply with the changes of local government regulations to rebuild that house. The building costs to find people to rebuild, the building materials, it just all adds up. And so they find that $500,000 house that burnt to the ground is actually going to cost them $750,000 to rebuild.
Yeah.
And people don't realise that, and it's a really, really tough time to see people that are in that position.
Well, it's when they're most vulnerable, right?
They're vulnerable,
time.
and they just thought that they just pay their insurance and roll it over without adequately getting the right advice. Does my house represent current market value?
Yeah. I mean, we see it when we have to finance. So when you go formal approval on a loan and the bank wants what they call the certificate of currency, and it's like, hey, by the way, the bank says you need to insure for this. And the first thing a lot of clients say is, that seems like that's awfully expensive for that property. I'm like, oh, hang on. Don't you want to overinsure your own house for that exact instance that if anything does happen, actually the make good on that's pretty damn worth it.
Absolutely.
Which is not in there. Yep. Preaching is converted. I guess the other parts for a lot of the other, I guess, burning questions is what happens if the tenant damages my property, for example, or there's wear and tear. So what's the distinction that happens between, say, tenant damage versus general wear and tear, and does insurance cover that, for example?
Yeah. Good question, Aaron. I guess tenant damage, and certainly the insurers that I deal with, is full accidental damage cover, which basically covers the damage to the investment property caused by the tenant and or their visitors for full replacement, which includes malicious damage. Not all policies will cover that. So again, the role as a broker is to identify the better policies out there that provide that cover. And you'd be interesting to know even damage to the property by the tenant's pets are covered up to, the policy limit. So there's a bit of comfort there, that knowing that if my tenant damages my property, and it's above the policy excess, then I'm going to be covered and up to the policy limits. Wear and tear comes up a lot. Total wear and tear on carpets is taken in consideration at claim time. If it's a 10-year-old carpet, insurers will depreciate the payout figure based on wear and tear. Or if it's an old fridge that's 15 years old, they will bring wear and tear into the scenario in the ultimate payout figure, because they're not going to give you a 15-year-old fridge with a brand new replacement.
Yeah.
Now, there are policies that will give you full reinstatement and replacement policies. They can be had. They're very, to get that extra. Sometimes, clients choose not to. But generally speaking, wear and tear is a standard policy exclusion.
Yeah, okay. What causes a claim? I mean, is it a claim that goes through a broker has a higher success of getting reviewed and paid out, or is there any statistics around that?
I don't have those numbers, but I can tell you it would be significantly higher.
Yeah.
We have our role as an insurance broker is a tripartite relationship between an insurer, our client, and ourselves. And our role at claim time is to roll our sleeves up, and talk to the claims people sitting at the insurance company to manage the claim on our client's behalf. And if we feel that their settlement cost is not fair and reasonable, we will challenge that.
Excellent.
And we'll go into bat. Whereas, somebody that buys their policy online sometimes doesn't have the luxury or the knowledge or the education to know that they're getting the check settled, but could they have got more?
Yeah, absolutely.
And so I guess our role is to always prudently manage the claim and make sure that our client is entitled to its full benefits. Very critical.
Yeah.
And, so that's one of the areas that gives me the most joy.
I can imagine. Satisfaction is ultimately why you exist, isn't it? I guess one of the questions that does come up for us is, how does a mortgage broker get paid? And, we explain commissions. It's not a dirty word. That's just exactly how remuneration works. People may see yourself as an insurance broker and go, and the type of clients you serve, typically at top end of town, more corporate, the SMEs, for example. How is remuneration figured out for yourself and a client, for example?
Two ways. Remuneration that a broker earns, insurance broker earns, is two ways. Commission is a predominant form of getting remunerated, predominantly in the SMEs commercial space, where the remuneration percentage of commissions is outlined in our financial services agreement, and the cost that the clients see, our fees are built into the overall tax invoice.
Yeah.
There's the alternative way is where we net the policy down. We take commission out of the program, out of the premium, and we then try and arrange and negotiate a fee that we think is fair and reasonable. And the fees are roughly the same as if the commission was built into the premium. So we don't want to earn any more.
Yeah.
But, ultimately we don't want to earn any less. But we want to make sure that our costs are fair and reasonable.
Yeah.
And I always say costs always come into the equation if the client feels that they're not getting the right service.
Yeah.
And so you always make sure that that is addressed early, and if they're happy with the service, then the costs are sort of secondary to what they're getting as a service.
Yeah, mate, well said. And I think if you want the cheap in life, then you go cheap, and you get that, and ultimately you get what you pay for as well. If you want to go to an advisor, it's like anyone, a financial planner, an accountant, you want something cheap and nasty, that's kind of what the results you're going to get.
Correct.
Versus you go to someone that maybe charges slightly a bit more but knows what they're doing, you're paying for that expertise as well.
Absolutely. And every renewal we try to do is demonstrate to the client that we've gone to and obtain alternatives, just to demonstrate that, one, the existing program is competitively priced, or secondly, we found an alternative program that we think is better suited based on coverage and price, and then we'll provide a recommendation and advice to move that program either based on cover or price. But so the client knows that we're rolling our sleeves and working for them and finding alternatives where, if they didn't have a broker, they'd have to get online or make the phone calls and do all that themselves.
Which, I mean, you look at the broker proposition, planner proposition, mortgage brokers, insurance. That's what we hear, that legwork that sometimes when you go, I don't know what that exclusion is, or I don't know what that fine print means. Sometimes you want to eyeball someone and go, actually, what does that mean? And can you take responsibility for this if things just don't go where the client thinks they need to as well? The other, I guess, another question that comes up and a source of frustration for a lot of clients is when they're buying properties interstate, and the insurance requirements vary state to state. So some banks will say, look, we need the property insured at the time that you purchase, so maybe contracts exchange versus on the day of settlement, and then the certificate of currency that comes with that. So can you just kind of cover off? I know it's broad that we take a snapshot of Australia, but just why some of those changes mean for someone that's looking to buy?
Yeah, there are, surprise, there are different rules and regulations around the countryside. The same is when settling on a property. When do I buy my insurance? When does the risk transfer from the seller to the buyer?
Yeah.
And predominantly a lot of my clients in New South Wales and Queensland, in New South Wales and Victoria, the risk transfer from the seller to the buyer is at settlement date.
Yep.
In Queensland, Tassie, and some other states, the risk transfer is exchange date.
Yeah.
So you got to be on your game. The advice I give to clients here is talk to your conveyancing solicitor, talk to your financier, and obtain from them when is in writing, when is insurance required?
Yeah, great.
Because you don't want to be thinking that it's a settlement, but it actually was a contract exchange
That's exactly
date.
right.
So talk to your conveyancing solicitor, talk to your financier. They will tell you very, very clearly, no, it's on settlement, or no, it's on exchange date.
Yeah, great.
And there are different rules around Australia, unfortunately. But our role is to understand where they're buying it, and then understand what are the rules of risk transfer.
Yeah, great. And I guess the distinction also is house and apartment, right? So apartment covered under the body corporate, for example. So the bank isn't necessarily going to ask you to take out the insurance for the building as such, whereas the building for the freestanding house is what the banks are asking for, versus the apartment that it isn't. It's all covered under body corporate.
That's correct.
Yeah. I guess in your experience, you've probably seen some interesting stuff, right? And you laugh there, but sometimes it probably isn't funny. Where you go, "Hey, look, you weren't insured for exactly what you mentioned before, underinsured, for example, or your policy didn't cover this." Just kind of want a couple of anecdotes or some of the stuff that you've seen in your experience to go, "Hey, mate, here's some stuff to be aware of," because we always say you can learn from other people's mistakes. And these are quite costly mistakes that someone has maybe made in the past when it comes to incorrect insurance or underinsurance as well.
I guess what I've seen many, many different scenarios. And I guess it all generally does come back to managing the claims for clients and, the feeling that I've had in adequately managing their claims. And I've seen some recently, where a client, didn't even know that they had tax audit cover, okay? Yeah. They were audited by the ATO. They spent over $50,000 in a professional accountant's fees. And then, they told me about this. And I said, well, you've got that covered under your policy. And they had no idea. So that $50,000 was paid back as tax accountant's fees. And they were over the moon.
That's burnt a hole in the cash flow, right?
Absolutely burnt a hole in the cash flow. And they said, geez, I wish you'd told us earlier. We wouldn't have stressed that much. But and that's sort of a good sort of segue into clients. You do, whilst you have a broker, you do sort of have to take a bit of an understanding of your insurance needs at times and just get a bit of an understanding of what you're buying. Every policy is going to have policy conditions, what you're covered for, and every policy is going to have exclusions. And that's where, the exclusions components is where really we have grief with clients. The other component, the other recent bit of good news I felt was during COVID. A client of mine bought an investment property in Queensland, and the client was significantly in arrears in rent,
right?
Breached their contract, and my poor client was out of pocket. He rang me up. I said, absolutely, get all your invoices from your property manager, get every piece of documentation you can find, and we'll submit that to the insurer. We submitted it. Took a little bit of time, but he had all the documents. The time he took to obtain the documents, unfortunately, was from the property manager, which sort of, I always say to clients, make sure when not only you're buying a good insurance policy, making sure when you've got an investment property, working with a very good property manager, because they are critical in managing your investment.
The unsung heroes of property investing, to me, are property managers.
They are.
Yeah, a bit like an insurance broker. You don't realise the value of them until you need them. I can say that because one of our investment properties, again, the tenant was late. What happens? What are our rights? You don't realise how much you need to lean on them until you actually do need them.
Absolutely, they do a wonderful behind the scenes work at times, and so we submitted that claim, got it paid, and so he was basically in the same position before the breach of the contract and being in arrears in payments. And you really, as the landlord, you should never not be informed that the client is significantly in arrears, because it's a massive red flag if you're not being told that.
Yeah.
And I guess, we touched on it earlier, Aaron, is when you're purchasing insurance on your investment property, you've spent a significant amount of money on the investment. My message is don't try to look for the cheapest insurance policy that's protecting this new asset or a second asset or a third asset, because what you want is their policy to respond in the time of need. You can go and buy a plethora of insurance policies online now and save $600 or whatever the saving is, but how do you know what you're getting covered for? Do you know that it's going to respond if your tenant defaults, or if the pet of the tenant has destroyed your property? Do your research, work with a broker if you have to, but don't buy inferior products based on price, because ultimately that will bite you, because you'll find that you will need to ring the insurer to submit a claim only to find out that that wasn't covered because you didn't take up that optional extra, or, the policy excluded that because of this and this. So insurance is a complicated contract of law. I've been around for 35 years. Don't ask me to know every exclusion in the policy, but what I will do is know where to find it and then convey that message. Yes, you're covered. No, you're covered. This is grey. We'll need to test it. So my key message is don't buy the cheapest policy, because it will eventually hurt you.
Yeah. I love it. It's very sage advice there. It's like anything, cheap is cheap. And you don't want to find out the hard way that you've bought a cheap policy that then doesn't really entitle you.
We all know. Even residential landlords insurance is tax deductible. So work with your accountant and say, I'm paying $1,600. Great. But Mitch has been able to get me this, and this.
That's it.
There you go.
Cut it. It's a cost of doing business when you buy an investment property. Yeah, don't cut corners. Yeah, wonderful. Excellent advice. I really appreciate you, mate, sharing your wisdom and your knowledge with us, and also a couple of really good stories as well. Really appreciate that. What we will do is we'll include Mitch's details in the comments below. So if you want to get in touch with Mitch, whether you're self-employed, whether you're a property investor, for example, and you just want to understand a little bit more about what your policies entail or want to get a second opinion, Mitch is definitely someone to have a chat to as well. Mate, thank you very much for joining us in the studio, mate. Really appreciate it.
Thank you, Aaron, for having me.
Mate, wonderful. That's another episode of the Australian Property Investment Podcast. I've been your host, Aaron Christie David. Until next time, take care.